Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. Today will be the Wednesday, a rather pivotal day, 30th of July 2025. All right, so before we kickstart our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment products, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we kickstart today's Daily Dose of Market Insights will be very pivotal. Why? Because today will be FOMC day and followed by two key mega cap US big tech stocks earnings release, which is Meta and as well as Microsoft. I'll touch more about that later. So before we jump straight into the gist of our daily dose on the daily basis, which is the intraday technical outlook on the four major US dollar pair, the six major stock indices, and the two key commodities market, which is gold XAU/USD, and as well as the West Texas crude oil. Let's have a recap of what has taken shape yesterday and in today's early Asia session in terms of their intraday movement of these respective broad-based cross asset classes in relation with their respective news flow and economic data release. All right, let us start with the news flow of yesterday's, we call it key news flow and key data release first. So for yesterday, we have a key data release more pertaining to the health of the US economy, which is the release of this tier one leading US economic data. I would say it's a soft data because it's survey-based consumer confidence done by a third party organization called Conference Board. So Conference Board consumer confidence actually is very similar to the University of Michigan consumer confidence, and previously the University of Michigan consumer confidence, after plunging since on April, it starts to stabilize, and that also has already kind of seen in the Conference Board consumer confidence data as well for the month of July. So for the month of July, it actually kind of improved slightly to 97.2 from 95.2 that was previously printed in the month of June over here, and also came in as above expectation of 95.8. And if you go to the Conference Board we call it website, the reason for that improvement is due to what I call it over here. Where was it? There was somewhere around. Yes, so it's more pertaining to the big beautiful bill which is being passed by Congress, which is making a permanent corporate tax cuts permanent, and some consumer praising its potential positive economic impact and others expressing concerns over here. So basically that we call it a positive vibe from this one beautiful corporate tax cut bill from the passage in Congress last month, that manages to actually I'll say this month, early this month, that managed to actually inch up the consumer confidence index being surveyed by the Conference Board over here. So how does this actually spill over to the US stock market and as well as the FX market? So let's start with the US stock market first. So the US stock market started the session rather robust over here between the 9:30 p.m. and the 10 p.m. mark. It actually hit a fresh all-time intraday high yesterday on the S&P and as well as the Nasdaq 100 as well. So, but however, as the US session progresses, it starts to see a bit of profit taking over here. So, all the major four stock indices ended the session in the red. So the SPX is down by negative 0.3%, the Nasdaq is down by negative 0.2%, the Dow Jones is down by negative 0.46%, and the Russell 2000 is the underperformer, down by negative 0.6%. So this is more like related to profit taking ahead of a key risk event that is about to take shape later in the US session today, which is the FOMC meeting and as well as Fed Chair press conference. But however, if you dive deeper into the heat map of the S&P 500 component stocks, we do not see all of them deeply in the red. It's more profit taking on the mega cap technology stocks, where Nvidia has been pretty much bullish in the last 2 weeks. Saw intraday profit taking yesterday, down negative 0.7%. And also today we also have the earnings release after the close of the US session today. That means i.e. Singapore time after 4 a.m. 31st of July, early Thursday morning tomorrow. Microsoft is almost unchanged, which is going to release their earnings, and followed by Meta. Meta has been pretty much red hot since the start of this year, and as well as since we call it Expo's Liberation Day shop rally up. All right, over here. So far, the performance, yes, intraday performance of Meta saw a profit taking down negative 2.46%. Okay, so that is kind of pretty much I'll put away that pretty much of a normal behavior, where previously we call it returns on Meta and Microsoft has been pretty much robust for the bullish side since the low of April, and even since the start of this month. So it's pretty much nature to see profit taking, we call it activities taking shape ahead of respective key risk event, FOMC today, and as well as the earnings number of Meta and Microsoft. And why are they important? Because Meta and Microsoft is a mega cap component stock of the S&P and the Nasdaq 100. Whatever exposed earnings price reaction from them could have a significant feedback loop back into the S&P and the Nasdaq 100, especially the Nasdaq 100, given that Meta and Microsoft has a higher weightage in this index over here. So primarily speaking, profit taking, I would say there's a profit taking activities that is being seen centered on the mega cap technology stock yesterday, that actually drove the Nasdaq and the S&P 500 into the red and causes a negative feedback loop into the rest of the other market as well. But however, the defensive market yesterday managed to help pretty much firm with the consumer staples defensive, the real estate and the utility, and as well as certain energy related stocks over here that close in the green due to higher oil prices. Later I'll touch more about that. So how do we see that, right, is by going to groups over here. So what I do over here is that this Finviz website is pretty much of a good website to actually detect market breadth and as well as sectorial performance of the US stock market. So if you look at the 1 day, okay, give me a minute, there's so many ads running around here, so hopefully, how do I close this? Okay, so this ad here is pretty much irritating. Okay, no mind. So if you look at this, the 1 day performance. So yesterday we see the defensive sector, the real estate, which is primarily consists of REITs, up by 1.6%. Energy due to higher oil prices, up 1.10%. And utilities, which is considered as a low beta sector as well, which is a defensive sector, positive 0.97%, and the consumer defensive, which is consumer staples, also considered as a low beta sector, up 0.72%. So basically, these are the 11 key sectors that made up of the S&P 500. So we don't see entire of them in the red. So there is not like a kind of a systematic across the board selling. So it's more profit taking on the technology stocks, financial stocks, and consumer services stocks that causes a intraday rotation shift, where previously these stocks in this sector has been outperforming since the start of this month over here. Very clearly, this what we could see this is a 1 month performance. Technology, industrial, basic materials, all of them has been outperforming. All right, so we see a shift of sectorial intraday sectorial rotation. All right, so later I'll touch on the S&P 500 intraday movement, the intraday movement of the US Wall Street 30, which represent the Dow Jones Industrial Average, and the intraday movement on the US Nasdaq 100. And very interestingly, yesterday's fall intraday dip managed to find support right exactly at our key short-term pivotal support that we have been highlighting since the start of this week. All right, so that's for the stock market performance from the US intraday movement in relation with the news flow. And also some news flow on the highlight is pertaining to the US-China trade relationship. So very interesting how these things play out. So since the start of this week, US trade officials and China trade officials has started to start their third round of trade negotiation talk in Stockholm. All right, and prior to this third round of trade negotiations talk between US and China, over the weekend there's some news flow from SCMP that stated that there's going to be a 90 days deadline extension. So previously the trade truce extension was agreed to end on 12th of August. So that was being held in the negotiation talk previously in Geneva and London. So they both sides agreed to actually have a trade truce deadline 12th of August. So right now, seems to me that this extension is going to be extended for another 90 days, and that actually came out between from the Chinese counterparts over here. So US and Chinese trade negotiators has concluded their last round of trade talks in Stockholm yesterday. So it's actually a 2-day talk from Monday and Tuesday, and an agreement to extend their tariff truce. Chinese trade negotiator Chen Gang told reporters without giving details of the extension. So basically talks were candid and in depth. He said on Tuesday yesterday, both sides will continue close communication going forward. Right, and these meetings are followed the previous 2 rounds of meeting between the world's biggest economy in Geneva in May and London in June. So when they conclude in London, the second round, they have this deadline on 12th of August. So now they will be extending it for another 90 days over here. So how do you know 90 days? If you look at over here from the US side of the story over here is this. All right, so basically, after that, Treasury Secretary Scott Bessent, which is also part of the key members of the US trade delegation or trade officials who lead the US trade delegation, saying that the Chinese counterpart has jumped the gun a little and asked on CNBC whether he recommend an extension of the pause. Bessent said that he will give Trump the facts, then he will decide over here. So basically, he said that adding extra 90 days is one option, but the final call is actually still lies on US President Trump, whether he's willing to do the extension. So he claimed that the Chinese side has jumped the gun a fair bit, and that means, i.e., there is no concrete, we call it a situation that this 90 days or extra 90 days pause has really firmed up yesterday due to the remarks made by Treasury Secretary Scott Bessent saying that US President Trump will decide on the final call after hearing US Treasury Scott Bessent's viewpoint from yesterday's trade negotiation meeting with the Chinese trade officials. So that also causes a bit of profit taking yesterday, and with that, that created a bit of trade tariffs uncertainty between US and China, whether Trump will start to change his pattern again and start to say things pretty much rhetoric or pretty much hawkish towards this US-China trade relationship that has starts to turn to the better situation in the last 4 weeks or so. That also causes the US dollar to bounce. All right. So what we could see over here is that the US dollar not necessarily the US dollars bounce setback. What I mean, the US dollar bounce setback, a bit of tongue twisting. So the US dollar actually do a kind of a pullback yesterday at the start of the US session. Also, that also coincide with the uncertainty surrounding the 90 days extension from the 12th of August US-China trade truce as being portrayed from the US side, kind of pushback the Chinese counterparts' optimism, saying that there will be a 90 days extension. All right, over here. So that causes the dollar rebound to trended off throughout the US session yesterday. So there was a intraday US dollar decline at the start of the US session, and it lasted into today's Asia session as well. So if you look at the 5-day rolling performance of the US dollar as of 30th of July, that US dollar strength setback that has taken shape since the start of yesterday's US session has also come in line with the dwindling downwards of the US Treasury 2-year premium shrinkage versus the rest of the world 2-year sovereign bond yield. So basically what I do is that this blue line over here is the difference between the US Treasury 2-year yield minus of a weighted average of the sovereign bond 2-year yield across this major economy, which is Germany, UK, Japan, Canada, Swiss, AU, and China. And yesterday's decline in this line, that means i.e. Is telling us that the 2-year treasury premium is shrinking against the rest of the world 2-year sovereign bond note. All right, the rest of the world. All right, so basically US treasury yield premium is narrowing across the rest of the world based on the 2-year duration. All right, so that also causes the dollar strength rebound to stage that pullback or decline during the start of the US session yesterday, right over here. So in fact there's this leading so this line here is leading at this point down, where previously we see a higher high in the performance of the dollar, but over here ships a lower high. All right, and if you look at from an intraday perspective, that means on the 1-day rolling performance over here, the dollar continues to plummet, and the dollar is the weakest against the yen right now as we are speaking. They are down by negative 0.4%. Still recall that dollar yen yesterday we shift to a bearish stance. Why? Because the 4 weeks plus of rally has hit a medium term pivotal resistance at the 149 level, 149.60 level. So later I'll touch more about that in greater detail. All right, and also the 2-year treasury yield versus the rest of the sovereign bond yield 2-year, the yield premium also starts to decline as well based on the 1-day rolling performance. All right, and with the dollar setback taking into shape over here, the gold continues to hold firm above that 3,300 level. So what do I mean by that? So let's look at the gold price over here. Okay, come on. Where is the chart? Okay, give me a couple of seconds to open up the chart. Okay, good. Okay, so this is the daily chart of gold. All right, so gold continues to trade in this kind of triangle like of sideways range configuration since the all-time high of 22nd of April, and right now it managed to actually stage a bounce of the lower limit of this sideways range triangle light range configuration at the pivotal support level, medium term pivotal support level, which I define on the daily chart of gold. All right, so this is the daily chart of gold. All right, over here, let's push it up here. Okay, so 3,300 level, also a psychological level. So gold managed to stage a bounce yesterday, ended with a gain of 0.4%, managed to snap that previous 1, 2, 3, 4 day of consecutive decline. So that also came in with the dollar strength setback yesterday as well since the start of the US session. So can go further today. There will be a key level to watch. Up key kind of upside trigger level ahead of today's key risk event date, which is the FOMC meeting and the Fed Chair Powell press conference. So later I'll touch more about that. What is the key level to watch on the intraday technical outlook on gold XAU/USD. So yesterday we see oil prices continues to rally for the second consecutive day, up by close to about 2% or 3% plus due to news flow coming up from Trump over here. So basically yesterday, Trump continues to tighten the news on Russia over here. So giving Russia 10 days kind of deadline to resolve a ongoing standing conflict with Ukraine over here, so forcing Russia down to the negotiation table for ceasefire talks between Ukraine and Russia. So if Trump also threatened that if Russia do not come to the negotiation table to discussing about ceasefire talks between the respective stakeholder, there could be what I call it further additional sanctions. US may impose further additional sanctions on Russia, so that could potentially curtail Russia oil supply to the global market. So that actually causes oil to actually spike up over here. So the West Texas crude oil as they jump for the 2 consecutive session of more than 2%. So prior to the jump on Monday, it was 2.8%, and yesterday it jumped by 3.4%. Breaking up above this range configuration that previously has been in place since 24th of June, and also clearing above the 20-day, 200-day moving average as well. So that actually kind of opened the door for some kind of short-term bullish movement for the West Texas crude oil after yesterday's news flow coming out from US President Trump threatening Russia with more sanction if Russia do not come to the negotiation table to discuss about ceasefire between the respective stakeholder pertaining to the situation in Ukraine. All right. So later I'll touch more about the key levels and trend bias on West Texas crude oil on the intraday basis. All right. So that okay. So that potentially sum up the first segment of today's daily dose over here. So now let me touch on the second segment, which is before I jump into the intraday technical outlook, there's this particular intermarket chart that I want to share with you more pertaining to gold that will impact the trend from a medium term perspective. That means talk about multi-week to multi-month over here. So yeah, this is the chart of gold. So bottom chart will be the gold chart over here. All right, so this gold. So this will be a daily chart. So it's a longer term chart rather than the hourly chart. So the bottom chart of gold, as you could see, it continues to hold around the 50-day moving average. It hold around the 50-day moving average. So very clearly, if you look at the chart of gold over here on a close basis, so this is a closing chart over here, removing the high, low, and close. So very clearly, this is a very clear ascending triangle price configuration as price continue to hover since the fresh all-time high that was being printed in April this year. So as it continues to hover in this bullish ascending triangle range configuration, it is also being supported by lower US 10-year Treasury real yield. So real yield is taking into account of the nominal yield minus of the inflation expectation, the 10-year inflation expectation rate, which is based on this TIPS, US Treasury inflation protected bonds over here. So based on this 10-year US Treasury real rate, stripping off of interest rate expectation, the real yield rate of the 10-year US Treasury continues to inch downwards below the 2%. So right now it's trading at 1.9% over here. So if you realize that over here is that if this US 10-year US Treasury real yield continues to be subdued, continues to trade within this descending range configuration since the high of October 2023, it has been supporting this broad-based uptrend in gold. All right, so if we start to see a further inch down in the US 10-year Treasury real yield below the 2% level, which is I'll say below the 2% level, and below the, which is a range over here. Okay, below the 2% level and below. Okay, so it's a range below. Okay, where is it? Okay, below 2.10 and 2% over here, which is the branch of 200-day moving average, the 20-day moving average, and the 50-day moving average, and it continues to inch downwards towards the 1.66 level, which is the swing low area of 4th of April before this minor bounce. That could potentially support a further firmness of gold price, and also potentially supports a bullish breakout from this multi-month bullish ascending triangle range configuration that has taken shape since April this year. So that's close to about 3 months already, multi-month. All right. So if a further push down in the 10-year US Treasury real yield towards the 1.66% level, that could potentially be a potential positive catalyst for gold XAU/USD to break out of this multi-month bullish ascending triangle range configuration. So something to keep an eye on for the gold market based on this intermarket analysis that I'll share with you guys between the US 10-year Treasury yield and its impact on the gold price from a longer term time horizon, multi-week to multi-month. All right, so now let us now focus now on the intraday movement instead. All right, over here. So now let me expand my screen. Okay, so let's start with the FX market over here. Okay, so for the FX market, let's start with the euro dollar. So for the euro dollar, yesterday we turned neutral over here. So neutral between 115.70 and 116.80. So it broke below the lower neutrality limit and hit our next support level at 115.20. So upon hitting the next support level, price action do a lower low. Over here, there's a lower low. So upon doing a lower low, the RSI instead form a bullish divergence. All right, over here. And what we could see, the RSI also managed to stage a bullish breakout from this parallel descending trend line over here. All right, so it's about to retest this trend line, but prior to that, there's a bullish divergence that has already been formed. So indicating that the downside momentum that has taken shape since Monday has started to ease off, and also with this bullish divergence that's being formed, there could be a chance that at least some form of minor rebound could take shape to retrace a certain portion of this steep decline that was being seen on Monday and Tuesday over here. So if we do the Fibo retracement of this steep decline, okay, it could actually hit the at least the 50% level mark over here, which is so very close to 1.1680. Okay, over here, where is it? Yeah, this level. Okay, let me push it up. It's the 61. Okay, 1.1680, which is so the pullback resistance of this former medium-term ascending channel from 13th of May 2025 low, broken down on Monday, now turns into a pullback support and so confluence with the 20-day moving average. So with that, I will flip to a bullish bias for today from a neutrality stance yesterday, using for sure the 115.20 as my short-term pivotal support level. Upside trigger level will be 115.70, which is the 50-day moving average, and also there is a intraday high that is being seen in today's Asia session as well. So above 115.70, that's considered my potential upside trigger level, may see a kind of a rebound, at least a short-term rebound, to expose the next intermediate resistance at 116.80. All right, so that's for the euro dollar. However, if price actions plummet downwards instead and starts to shape a bearish breakdown and an hourly close below 115.20, then potentially we may open up scope for a further corrective decline sequence, exposing the next support level at 114.50, which is a 1.236 extension on the downside, taken from the high of 1st of July, and very closely the 114.20 level slash 114 figure level, which is the congestion area over here of 9th of June and 10th of June at 1.14 figure level next. All right, so flipping to a intraday bullish bias for at least a short-term recovery, using 115.20 as my short-term pivotal support level, upside trigger level 115.70 on the euro dollar. Next up will be the sterling dollar over here. So the sterling dollar yesterday plummeted and hit our first support level at this 133.30 over here before shaping a bounce up in today's Asia session. And also very interestingly, the RSI also has started to shape a bullish divergence as well. Okay, over here. So given the fact that the RSI has really shaped this bullish divergence, I'm not so convinced right now to maintain my bearish bias that it may go down to 132.50 next. All right, so 132.50 is the lower limit of this ongoing minor descending channel that is still in play since the high of 1st of July for the sterling dollar over here. So at 132.50 is also the minor swing low area of 14th of May and 16th of May. So given this bullish divergence that's being taken shape on the sterling dollar from an hourly chart perspective. Lower conviction to maintain my bearish bias, which I had for yesterday. That means, i.e., lower conviction of it breaking down below 133.30 and hitting 132.50. So with that, I will have a neutrality stance for today. So I'll flip to a neutrality stance between yesterday's intraday low level, which is at this 33.10 level over here. Okay, let me put it in writing. Okay, give me 1 second. 133.10. And yesterday's pivotal resistance, which is at 134.10. Okay, so flip to a neutrality stance from a bearish bias yesterday to based on the elements that I explained to you guys earlier on or highlighted to you guys. So neutral between 134.10 and 133.10 on the sterling dollar. A breakout above 134.10 will trigger off at least a kind of an intraday rebound slash recovery scenario to expose the next near-term resistance level at 134.70 followed by 135.30, which confluence with the 50-day moving average and as well as the upper boundary of this ongoing minor descending channel that is in play since 1st of July. So that's for the sterling dollar. Next up will be the Aussie dollar. So the Aussie dollar managed to bounce and above our 65 figure level that we highlighted yesterday, and the RSI continues to inch up higher over here. So still no change, still watching the 0.65 figure level as my short-term pivotal support. Maintain my intraday bullish bias for at least some form of short-term recovery taking shape on the Aussie dollar, still within this sideways range configuration. First resistance level to watch will be close to the 20-day moving average area at 65.40, 65.50, above 65.50, potentially seek retest of this Monday or this week intraday high area at 65.80 level. All right. However, if price action starts to do a bearish breakdown and the hourly close below 65 figure level, then price action may dwindle downwards towards the lower limit of this sideways range for a retest of the 17th of July minor swing low area at 64.55. All right. So that's for the Aussie dollar. Still maintaining our intraday recovery slash bullish bias using 65 figure level as my short-term pivotal support. Up next will be the dollar yen. So the dollar yen, like I say, let me share you on the daily time frame chart. It continues to churn within this ascending range configuration since the low of 22nd of April. And every time it hit the upper limit of this ascending range, which is at a range of 149 figure level, 149.60, which is the 200-day moving average, price action starts to show a bit of hesitation of breaking upwards. So this hesitation has been taken in the form of a daily doji candlestick on Tuesday, and yesterday it actually shaped a bearish Marubozu candlestick, all right, giving a bit of what I call a kind of a inverted V-shaped scenario. All right, so if you look at the three candlestick formation, it also could be forming of a not so perfect we call it this one called what you call that this evening star formation. All right, taking onto these three candlestick. Previously daily bullish candlestick on Monday, but on Tuesday showing hesitation with a daily doji candlestick right at a pivotal resistance zone of 149 figure, 149.60, which is the upper limit of this ascending range configuration since the low of 21st of April, 22nd of April, and right below the 200-day moving average. And we have a negative price action follow through that formed almost a bearish Marubozu candlestick yesterday. Right, so this is not a very positive development for the boost. So given this latest technical elements that has started to form on the daily chart of the dollar yen, this allow me to maintain my bearish bias stance that I will have yesterday. all right, on the hourly time frame. So for today, no change over here, still at the 149 level, 149.60 level. Price action is now testing our first support level at 147.90. So still using 149 figure, 149.60 pivotal resistance zone over here to maintain my bearish bias for it to float down towards the lower limit of this medium term, multi-month medium term ascending range configuration that is still in place since 22nd of April. Next support level to watch below 147.90 will be 146.80 next, which is corresponding to the rising 20-day moving average. Right below it, potentially seek out a retest on last Thursday low at 145.85. However, if price action instead of shaping down and starts to erratically do a bullish reversal from here and breaking above 149.60, then potentially this bearish bias view will be invalidated to see a further squeeze up, where potentially stop loss level could be triggered pretty much easily, given that price action has been pretty much holding negatively at the 149.90, 149.60 levels since May this year, and that potentially could see some kind of stop loss level that's been clustered around this area, and a break above 149.60 could easily see a further squeeze up potentially to 150.40, 151.15, 151.30 next, due to stop loss level being triggered off. All right, so that's for the dollar yen. All right, next up will be the next asset classes, will be the 6 major stock indices, starting with the Asia Pacific region, which is the Hong Kong 33, representing the Hang Seng Index. So still recall the Hang Seng Index, we have that pivotal support level at 25,260, 25,215, which is the lower limit of this ongoing minor ascending channel that is still in play since 10th of July over here. So what I could see over here is that price action yesterday in today's Asia session retested the 25,215 pivotal support before staging a bounce. So same low, but the RSI now has started to form a higher low, showing that bullish divergence, so indicating that some form of bullish momentum is creeping back into the Hong Kong 33, right above or right at the pivotal support area at 25,260, 25,215. So for sure, no change. 25,260, 25,215 pivotal support, maintain our bullish bias to kickstart a potential bullish impulsive upmove sequence again on the Hong Kong 33. First resistance level to watch will be yesterday's high intraday high level at 25,520, 25,520. Okay, let me put it in writing. Okay, a breakout above 25,520 will seek out a retest on last Thursday that show this minor corrective pullback. We start this minor corrective pullback at 25,750. Above it continues its impulsive up move towards the upper limit of this minor ascending channel, and also the Fibo extension level at 26,030/26,220. And if you go back on a daily time frame chart over here, okay, let me go to the daily time frame chart. It's much more obvious. Okay, that also coincide with the medium term swing high area of 20th of October 2021 and 25th of October 2021. So that's close to about 3.5-year high. All right. So, but however, if price action erratically do a bearish reversal and a bearish breakdown and hourly close below 25,215, all bullish bias view will be invalidated to kickstart a minor corrective decline sequence again, exposing the next near-term support area at 24,940/24,850. So that's for the Hong Kong 33. Next up will be the Japan 225. Still recall Japan 225, which is the representation of the Nikkei 225. Yesterday, we do have a bearish bias, but we are looking out for a residual push down towards 40,460, maximum 40,130, as we have a view that is coming to the tail end of this retracement after that 2 days of steep rally from 22nd of July to 24th of July, and the retracement has already made the golden ratio at 61.8%. And what's interestingly over here is that yes, today's price action do another dip down again over here, marginally lower low, but the RSI continues to slope upwards. and shaping a higher low instead. So this is a bullish divergence, indicating that the downside momentum that's taking shape from 24th of July all the way down to today's Asia session low has dwindled off. And with that, we will be flipping to a bullish bias for today to kickstart a potentially recovery process on the intraday basis for the Japan 225. Using 40,130 as my short-term pivotal support level, which confluence with the rising 20-day moving average. First resistance level to watch will be 41,110, followed by 41,650, followed by a retest on the 24th of July 2025, a minor swing high area at 41,940 / 41,975. However, a breakdown below the 20-day moving average, which is the 40,130 pivotal support level for today, was invalidate today's bullish bias recovery scenario to seek out a extension of this corrective decline sequence unfolding further towards the downside, exposing the 22nd of April minor swing low area at 39,455. Below it may see the pullback support of this important former range resistance from May 2025 retested again at 38,940 and also confluence with the rising 50-day moving average. So i.e., due to the positive element that I shared with you guys earlier on the Japan 225. So hence, we will be flipping to a bullish bias for today. Potentially, the minor corrective pullback from 24th of July may have already ended, using 40,130 as my short-term pivotal support level. Next up will be the Germany 30. So the Germany 30 continues to bounce as anticipated from the 23,930 short-term pivotal support that were highlighted and also the 50-day moving average. So the Germany 30 seems to be evolving in this minor sideways range configuration since the fresh all-time high of 10th of July. Right, so this is a sideways range. So given that it's a sideways range, definitely we do not want to actually do pivotal support level in between the range. Why? Because you will get whipsaw very easily. First support level to watch for today will be 24,180, which is the 20-day moving average, and also yesterday's US session low. Pivotal support still remains at 23,930, because if we do pivotal support in between the range, you will get chopped off very easily. All right, so 23,930 will be my short-term pivotal support. Maintain my bullish bias for it to push up towards the top of the range at 23,140 over here, right? So a breakout above 23,140 potentially could seek out the new resistance level at 24,720, which is a Fibo extension cluster level. However, if price action break down below the range at 23,930, then this range sideways range configuration will start to unfold into a minor corrective decline sequence, exposing 23,640, followed by 23,450 next, which is the minor cluster area of 18th of July and 18th of June and 20th of June this year. So that's for the Germany 30. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 continues to trade kind of a minor sideways range configuration ever since the retest of its current all-time high of 45,100 that was printed in December last year. And yesterday's pullback managed to help firmly arrive exactly at the 44,620 short-term pivotal support level. So no change. Indeed, in order for the boost to maintain its bullish bias, definitely this will be a pivotal support to watch. So as long as 44,620 is my pivotal support level for today, still maintain that bullish bias for at least a retest at the current all-time high level at 45,100 in the first step. Only a breakout above 45,100 will see a better bullish, a more forceful bullish momentum coming into the US Wall Street 30 that's representing the Dow Jones Industrial Average to seek out the next intermediate resistance at 45,455, 45,520, which is a Fibo extension cluster level. Right, and if you do the parallel ascending channel, given that it now has started to form a series of higher low since 16th of July over here. Okay, that also coincide with the upper limit of this ongoing minor ascending channel that is in place since the minor swing low of 16th of July. However, if price action breaks below 44,620 for hourly close below it, then a bullish bias view will be invalidated to see another round of choppy minor corrective decline sequence back towards 44,150 in the first step. So that's for the US Wall Street 30. All right. Next up will be the S&P 500. So the S&P 500 also continues to shape that minor corrective pullback yesterday after hitting the first resistance level that we highlighted earlier but managed to bounce off from this pivotal support that we highlighted at 6,370 yesterday. So this is indeed a pivotal support level to maintain the bullish bias on the S&P 500. So 6,370 pivotal supports to watch out for today. Maintain that bullish bias. First resistance level 6,430, 6,450. Above it, seek out 6,470, 6,490, which is a Fibo extension cluster level, and as well as the medium-term ascending channel that is still in play since May this year. And if you do a shorter term one, right, from the swing low of 16th of January, 16th of July, pardon me, if you do that Fibo parallel extension of this parallel ascending channel, that also constitute very closely for 6,470, 6,490, given this minor ascending channel that is in play since the low of 16th of July. So that's for the S&P 500. However, if price action do a bearish breakdown and the hourly close below 6,370, today's bullish bias will be invalidated to see another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 6,340, 6,330, below 6,330, see a further retracement to retest the next support level at 6,290, which constitute with the rising 20-day moving average as well. Lastly will be the Nasdaq 100. So the Nasdaq 100 yesterday did a fresh all-time intraday high at 23,480. Yeah, not yesterday. That was earlier on Tuesday. Then thereafter on Wednesday, it actually did. Okay, on Tuesday, it pushed up during the start of the US session. Then thereafter, in the later part of the US session, it starts to do that profit taking, okay, but managed to find support at our first support level at 23,320. So given that it hasn't a proper breakout above 23,480, I don't want to tighten my pivotal support to 23,320 just in case of any whipsaw. So still using 23,190 as my pivotal support level. Maintain that bullish bias for the Nasdaq 100 above 23,480 exposes 23,710, which is the upper limit of this medium-term ascending channel for May 2025 low. And if you do the Fibo, we call it not Fibo, the parallel ascending channel, right over here, that also coincide very closely to the 23,710 level as well. All right. So, however, if price action do a, okay, give me a minute. Okay, do a proper one. All right. So tested. Okay, over here. Tested one time, two time, three times yesterday. But however, if price action starts to do a bearish breakdown below 23,190, today's intraday bullish bias will be invalidated to kickstart a minor corrective decline sequence towards the next support level at 23,020, which is constituted with the rising 20-day moving average as well. Okay, so that's for the Nasdaq 100, and also sum up the intraday technical outlook on all these 6 major stock indices. So let us now focus to the commodities market, Gold XAU/USD. So for Gold XAU/USD, price action continues to help pretty much firmly against the 3,330 pivotal support level. Hit our first resistance level yesterday at 3,328 before trading sideways entirely in the US session and also in today's Asia session as well. So what I do over here is that today's upside trigger level will be at 3,334, which is the intraday high of yesterday, and as well as yesterday's US session high and today's Asia session high as well, 3,334. Okay, give me a minute. Let me put it in writing. Okay, give me 1 second. Okay, hopefully this thing's okay. A couple of seconds, sometimes it's very slow. Okay, let me rewrite again. 3,334, 3,000. Come on. Why it's not doing anything? Okay, good. 3,334 over here. So above 3,334. Okay, potentially says 3,353. 353. Okay, so this, which is the pullback of this former medium-term ascending trend line from the low of 31st of December, now turns into a pullback resistance, which is at this 3,353. So in order for the bulls to gain better, we call it bullish momentum, a firmer bullish momentum, equal to actually clear above 3,353 to actually then potentially we may see the next resistance coming in at this 3,383 level next over here. 3,383 level. Okay, and if you do the Fibo retracement, this should actually be the golden ratio as well. Okay, close to the golden ratio of 61.8%. All right, so net overall, gold continues to trade rather firm at the 3,300 level. Upside trigger level to watch for today will be the intraday high was of the US session, and the intraday high of today's Asia session tested 2 times at 3,334. Breakout above 3,334, seek out the next intermediate resistance level, which is a very key level, 3,353, which is the pullback resistance of this former medium-term ascending trend line from the low of 31st of December. A clear breakout with an hourly close above 33,353, then that would indicate potentially the kind of a higher odds that another round of bullish impulsive up moves may resurface in the first set to revisit the next intermediate resistance at 3,383 next on a very short-term basis. However, if price action starts to plummet downwards below 3,300, then this recovery scenario will be invalidated to see gold XAU/USD forming up a multi-week corrective decline sequence, exposing a slew of next support level at 3,283, 3,264, and followed by the test of 3,245 next, which is the swing low area, the swing low of 30th of June 2025. So that's for gold XAU/USD. So lastly will be the West Texas crude oil. So the West Texas crude oil cleared above the 200-day moving average yesterday and also cleared above our pivotal resistance. So right now what we could see is that the West Texas crude oil could continue to churn higher given that bullish momentum has started to resurface after yesterday's bullish breakout. So what we could see right now is that the hourly RSI is at the overbought region already over here, but no bearish divergence. So potentially there could be a retracement taking shape in West Texas crude oil, given that this level is rather extreme overbought at 81.8. Right, so this level is the most extreme overbought since the high of 13th of June not too long ago. So this is during the onset of the Iran-Israel conflict. So given that it may start to do a minor pullback, so pullback area to watch will be my pivotal support area for today, which is 6850/6915. So as long as price action doesn't surpass below 6850, which is the 200-day moving average, we will now flip to a bullish bias for West Texas oil. Next resistance level to watch will be 7120, followed by 6360, which is the former minor swing low of 19th of June and 20th of June. Now turns into a pullback resistance. And if we do the Fibo retracement of that previous steep sell-off over here, that constitute the golden ratio of 61.8% as well at 73.60. However, if price action continues to tumble downwards below 68.50, then we consider that yesterday's bullish move as a fake bullish breakout move above the 200-day moving average, and price action will trend downwards towards the lower limit of the range again, 67.30 and 66 figure next will be exposed, at least in the first step, before 65.20, which is the all-important range support that is still in place since 25th of June. Right, so that's for West Texas oil, and that also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's take a look at the CME Fed Watch 2, or what is the expectation like for today's Federal Reserve meeting. So market participants in the Fed Fund futures still looking for a high chance that the Fed will maintain stamp pad without cutting the current Fed funds rate to maintain it at 4.25% to 4.5%. So that's 97.4 odds or chances are that the Fed will maintain its rate. Only a slight percentage of 3% chance that the Fed will cut. And if you look at down the calendar over here on the aggregator tab, market participant is viewing a high chance that the Fed will move a rate cut on the next meeting in 17th of September, bringing the Fed funds rate to 4% to 4.25%. So that's an implied 25 basis point cut, and the chances is at 67% based on the Fed funds futures traders expectation portrayed by their price action in the futures contract, the Fed funds futures contract, before the FOMC meeting to take place today. And another high chance of 85%, the next move will come in, the next rate cut move of 25 basis point potentially will come in the last meeting of 2025, which is the 10th of December meeting, to bring it down to another 25 basis point lower to 3.75% to 4%. All right. And the only way that could actually support such expectation is that during the press conference where Fed Chair Powell will be quizzed about his view of the US economy, he potentially starts to turn to more of a dovish side rather than the wait and see approach that he portrayed in the last few meetings since the start of this year. Right. So now let us move on to the economic calendar. What are the data to look out for today, other than the FOMC meeting that will take shape at 2 a.m. Singapore time? So for today, before the FOMC meeting, we have some key European data. So Germany will release its Q2 flash GDP rate at 4 p.m. Singapore time. That could impact the euro dollar, the euro crosses, and the German 30 CFD index. And followed by this 5 p.m., we will have the aggregated Eurozone GDP Q2 preliminary growth rate data as well. And before the FOMC meeting at 8:30 p.m., we have US GDP growth rate. So that will be the preliminary one as well, something very important to look out for. And for those who are interested in the dollar CAD, we have Bank of Canada interest rate decision out at 9:45 p.m., followed by Bank of Canada Governor press conference at 10:30 p.m. So that takes shape before the US FOMC meeting. And at 10:30 p.m., so it will be the weekly EIA crude oil stockpile change. So that will be the every week the US Energy Agency will report this weekly crude oil stockpile change. So that could influence the short-term movement on the West Texas oil. That's 10:30 p.m. Singapore time, and followed by the all-important 2 a.m. and 2:30 a.m. Fed interest rate decision, which market expecting no change. And the press conference will be very important because that could potentially influence the next meeting interest rate cut expectation. So that is at 2:30 a.m. Singapore time. All right, then stretching out into early Asia session tomorrow, we have 9:30 a.m. Retail sales before the start of the day, those at 11 a.m. That could potentially influence the Aussie dollar. And also at 9:30 a.m. we have the MBS manufacturing PMI and the non-manufacturing PMI out from China. So that could potentially influence the Hang Seng 33. And most importantly, the dollar yen and the yen crosses and Nikkei 225. We have 11 a.m. at the start of our daily dose, which is Bank of Japan interest rate decision. Market participants expecting no change of interest rate, no hike, but market participants will be looking very closely on the quarterly outlook report. Will there be any downgrade of GDP growth? All right, so that is 11 a.m. Singapore time tomorrow. All right, so before that, like I mentioned, today will be earnings announcement of the two key mega cap technology stocks, which is Microsoft and Metal. So let me share with you guys over here. So that will take shape after the close of today's US session. All right, where is it? Yeah, so this is US data, 30th of July over here. So for Singapore time, it will be 31st of July after 4 a.m. All right, because that's the close of the US session. So Microsoft and Meta will be reporting, and market is now looking for a high EPS rate to come in versus a year ago. So EPS for Microsoft is 3.36 per share, $3.37 per share, way above the Q2 release a year ago at 2.95%, and very strong earnings growth for Meta as well, $5.78 EPS per share versus $5.16 a year ago at the similar quarter. So that could potentially shape the movement of the S&P 500 and especially the Nasdaq 100, given that Microsoft and Meta are heavy component stocks in the Nasdaq 100 and as well as the S&P 500. Dow Jones to a lesser extent, right? Given that Microsoft and Meta, even I think Meta is not part of Dow Jones industrial component. Microsoft, yes, but its weightage is not so high in the Dow Jones Industrial Average. All right, so with that, that sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.